Okay, good evening, everybody. Welcome to the Sunday Night Market Strategy Session for March 29th, 2015. Can you believe we are already done with the first quarter of 2015? It's just amazing to me. It really is amazing to me. Anyway, earnings. The Ruddles is correct, Scott, by the way. The Ruddles is correct. Now, earnings for this week, I only have Micron as something to look at, but earnings season will soon be upon us, so this weekly nothing important is coming up stuff will be ending because we're going to be having some big names report earnings. Now, I don't know if they're going to affect the market, but we will. It'll be different very soon as earnings season starts. Now, let's take a look at economic reports. German preliminary CPI is Monday. You got some personal spending, pending home sales, and Fisher speaks tomorrow night. Okay, 5 a.m. CPI flash estimate for the euro on Tuesday morning. Got a couple FOMC Fed members speaking, Lacker and Lockhart, on Tuesday morning, and then you got consumer confidence is at 10 a.m., and that's a red. That could move us. Wednesday, you got ISM manufacturing at 10 a.m. Lockhart's, looks like Lockhart's speaking a lot here. Thursday, you got the trade balance and the weekly unemployment claims. You got ECB monetary policy meeting accounts. It doesn't usually move us that much. And Friday, ta-da, we have the job numbers. Okay? Now, what is so special about Friday having the job numbers? Does anyone know? Anyone know what's the deal with Friday? Right, the market's closed. So you could write it down on your calendar if you're interested in knowing what the job numbers were. Now, Paul, is this just is this just wrong? And are they going to correct this and it's going to be next week? Or are the job numbers probably going to be Friday? Because sometimes they'll change it. All right. I don't know what Paul. I'm not hearing Paul, so I don't know if he heard me or didn't hear me. But
Wait, did you call for me yet?
yeah, no,
I'm here.
no, I just said the job numbers. Since it's Good Friday, is that just a misprint? And they'll be next week, or are they really coming this Friday with the market closed?
No, what I didn't see is because sometimes they'll do a holiday shortens. What they'll do is they'll have the bond market open, and the S&Ps will be open for an hour or two. I didn't check if this is one of those holidays.
All right.
It never works out well. It's a horrible thing to do. I think it happened in July of 2010. But I hate when they do that. Markets always spike.
It says they're closed on Good Friday.
No. But you look at the NYSE is closed, but right. The ES can be open.
Oh yeah, the ES can do its shadow session. The ES is open. The only time the ES closes is Christmas and New Year's. So they're always open on all these holidays.
So my guess, did you go to BLS.gov to see if they're really going to release on Friday or?
No, I just go to Forex Factory, but I mean I'll go to BLS.gov and here it is. Where do we look here? Economic reports. Choose a state. No. Choose a subject. Should I do just employment and see if it comes up? I don't even know what to do here. No, I don't know what this is. Oh,
no, you can go Google it while I talk. How's that? And then let us know.
No, this is, well, I mean, here it is. I mean, here's latest numbers. I don't know. But wow, this is a nice site. I don't go here. Yeah, so Dimitri says he's seen them a day prior. I have never seen the job numbers on a Thursday ever. Ever. I could be wrong, but I have never, ever seen the job numbers on a Thursday. Have you, Paul?
I can't. Memory says that we have once, and it was like in the last couple of years. But I also remember more times than not, they stupidly report the number at 8:30. Bonds are open, and the ES is open for an hour or two, and then they close.
Yeah. All right. Anyway, the stock market is definitely closed. So if you're trading futures, there may be a shadow session. There may be some volatility around that 830 number. If you want to try to partake in it, that's fine. Um, you know, but otherwise, there is no stock market opening there. Now, into holidays, we usually do have an upward bias. I don't believe it's strong enough into Easter to really warrant us getting really excited about that. If you see here, the market is basically now in this range right here. It tested these early March lows on Thursday and formed a spinning top, and then we formed an inside bar on Friday. I don't think the highs are in. We'll wait to hear what Paul has to say. I don't think the highs are in. I think we're going to go higher once again. I don't know if we're going to go from here or if we want to kiss the 200-day and make nice with the 200-day before we do that. But I do not think the ultimate high is in. I still think we have to see 212.97. Doesn't look like we're going to get there this go round, obviously, since we're down, unless it happens tomorrow, which I doubt. So, we could, if we do start rallying, and we could get first above the moving averages, but more importantly, above this congestion up here, then it's a different story. Then I think the bulls can be back in town. But right now, we are still in a massive uptrend. We have not seen a blow-off top yet. And, I guess we could call this a potential test. If you look at the cash market, though, or the IVV, and you don't go to, you don't look at the SPY, which claims that those trades are real, then you have new highs, and now you have a test of that high. It looks a little lopsided to be a head and shoulders so early. Plus, a topping head and shoulders would probably take a lot more time than the difference between this head and this shoulder. That's my opinion. Can it be smaller? Yes, but, this is a long rally. Okay, this is a very long rally, and V reversals are overall rare. They're extremely rare on the upside. Usually, a top is made with a rounding or a bowl shaped with lots of testing, new highs that are getting sold, a lot of distribution up top. Not seeing that yet. With that being said, I will hand it over to Paul. I will be back to do stocks in when he's done. Okay?
Thanks, Mike. Now while I'm just tinkering with my screen. There we go. Okay. Welcome, everybody. Hope you had a nice weekend. For the second week in a row, I took my 7-year-old to Vermont. We skied Friday and Saturday, so that was fun. Still waiting to ski one single day in spring conditions, but wasn't to be had this weekend. It was nice on Friday, mid-30s, and then Saturday was 11 degrees and snowing when I woke up. So much for that idea. Maybe this Friday. Let's see. So Tiny was talking about tops being, my word will be diffuse, tops not being a data point, but tops being more of a range that rolls over. So I just quickly put together this chart, and I know it's not part of our normal Sunday night, but let's take a look anyway. Because here, I want to show you a couple of things. Okay. Unless you don't want to do it, and then just ping me and say don't do it. Here is the chart of 1986, and although I was in college, I've done, as well you guys know, I've done extensive work back to the mid-1920s, and during this period, this was being called the end of the bull market. This was a major top being made, and when it broke down here, at the time there were a lot of technicians on Wall Street way back in the 80s and 90s, not anymore. So this trapped all the bears. Broke down below key support, double top, broke down, traded sideways. Everyone thought we were just going to collapse here. We didn't. We traded higher and just created an even bigger top. But something happened on the way to the bear market. The bulls came right back to life at 240 in the S&P and went immediately to 280. And then in April of 87, we had a decline. And everyone thought the top was in here. And then lo and behold, we blew off into August of 87 right here. And we went down into September of 87. Double bottom. And we had this last gasp rally into early October and then kaput. So in 86, everyone got bearish here because this is an incredible top. The market didn't agree. After 2/3, and they cut them loose. This to me is the most dangerous setup here. That was 87. Obviously, hindsight's 20/20. October of 89, when we had the mini crash, this was no setup for a peak. This may have been a little top, but then we blew out to new highs. We crashed for a day, and then we went right back to new highs in January of 1990. And then we had the Drexel going out of business sale here, 10% decline. And let's go. And here is, Iraq invading Kuwait. Here is the top here. Market went down 20+%, and watch this. So this is a 20% decline. This was not a textbook top because it peaked from the actual peak. There was no rolling top. It wasn't a dangerous setup. It just, and people say, well, it's because Iraq invaded Kuwait. But the market's always set up for these kind of things to happen. This caught a lot of people by surprise, present company included. I did not see this one coming. I got religion down here. This got me, and I said, uh-oh, we're in trouble. And then here, we're in trouble again. And then, is it 92, 93? Yeah, here's the next time. What an unusual period this was. For almost an entire year, we were building this monster peak, and in Wall Street, people got really bearish here. And then what happened? We blew off the upside again. So I guess the theme of the story is don't be in such a hurry to get bearish or to guarantee a peak is in or a bottom is in. Bottoms are usually spiky affairs. Bottoms usually happen in W or V or some kind of spiky emotional affair. Peaks don't, but don't say never ever, because as you saw, every once in a while you get caught with your pants down. 93, look at this. We kind of go sideways and nowhere. This one I remember vividly, 94. This whole year was frustrating for everybody, but people got as bearish in 94 as at any time except for the crash in 30 years. And we had not even a full 10% decline. And we blew off into 95. And 98 was, I'm not going to go through all this. Let's go to 98. 98, I vividly remember this too, because I was heavily, heavily long. This top, everybody was calling the end of the bull market. You had a monster 97, in a 98. Market went nowhere. This was the peak of the bull market, except something happened. We blew off again to the upside into July. Then we peaked here, and the market began to go down. So you have to be very careful with these trading ranges where everyone gets bearish and they blow off one more time to the upside. So in any case, I could go on, and I'm sure you don't want to hear that all night. Let's go to where we are today. Okay, overnight, anything going on? Little weakness right now. ES 21 bips, NAS 20 bips. Volatility is up a little bit, so that kind of weakness really is meaningless. Let's go into the ETFs. So last week at this time, I'd said, and I wrote in the blog, that longer term, intermediate term market still looks dynamite to me. I'm going much higher. But short term, there were enough things in place to warrant a little pullback. Last week certainly counted as a pullback. We had really one bad day last week, which was Wednesday, but you have a little pullback. You also have something, if you notice, that the Dow came up and could not score an all-time high. The Dow peaked short of its all-time high, rolled over, and you're back into this trading range you've been in for, I don't know, whatever it is, 6 months. So let's go on and see what the other indices look like. I think you already know already, but here's the Dow, the S&P. Looks kind of sort of similar, right? Back in the trading range. Not a great formation here. Dow no good, S&P no good, but mid caps, on the other hand, did score an all-time high last week. So give one to the bulls. And the small caps, they scored an all-time high as well. So give one to the bulls there. The Qs have been lagging, and they look more like the Dow and the S&P. So what does it tell you? We have 3 indices that couldn't make all-time highs, 2 that did, but the 2 that did were more of the risk-on indices. That's an intermediate-term bullish sign. Did we bottom last Thursday on the S&P? Was this the bottom? I don't have a lot of conviction on this. I am heavily long, for full disclosure, but I don't have a strong opinion whether Thursday's low was the low or we're going to have a little rally and then cut them loose one more time. To me, it could go either way at this point. No opinion. But I think the indices look like they're trading range mode. They do not look bad, so I don't think you should all run out and get too bearish. Every single pullback weakness has been a buying opportunity. Let's wait to be proven wrong before getting bearish. Europe put a new high in for 2015. Europe still looks. I've said it all year long. Europe still looks okay to me. People are a few more people have been recognizing this trade, but I don't know. I still like Europe right now. It trades fine. Emerging markets did not. Come on, there you go. Emerging markets were not really that constructive last week. We're still below these 2 peaks, which I still believe we are going to trade back towards 42 at least, but nothing really constructive in the emerging markets last week. My 2 longs remain China, which I'm long, it's in a trading range, and the Philippines, which almost scored. Oh, no, I'm wrong. I'm thinking about a different ETF. Philippines remain in the trading range. I own these 2. Those are my only 2 emerging market ETFs I own. The ones you guys keep asking about, you guys always ask about Russia. I've said it for, I think, all year. I don't have a lot of interest here. Not that it can't go much higher or lower, but the time to buy it was here when it was incredibly volatile and emotional. And up in here, it's in no man's land. I really don't have an opinion. Brazil, I still don't like, even though commodities are in the bounce. I think you've got more, need some more constructive work on the downside here. I don't think this is any kind of wonderful bottom yet in Brazil. And India, which is on my watch list, I sold it a couple of weeks ago. I still don't love. Maybe in a couple of weeks, but not right now. So those are the major indices. Ouch, scratching my head. Let's see. Any questions? Ricardo asked about turkey. I think you might have asked last week. Turkey, I don't have any interest either way. I think it's a crapshoot right now. You've got two good bottoms here that have now become resistance, and you got a low here. I think we're in a trading range for the foreseeable future in Turkey. Okay. We do have to be on the lookout for end-of-quarter window dressing this week in the strong stocks, although the strong stocks like the biotechs got whomped pretty good last Wednesday. Let's go on. Three key sectors. Banks. Last week my view was they were on the positive side. I talked about trying not to get pigeonholed. On the positive side of neutral, they look okay. I mean, I kind of like the candle from Thursday. They're not great. They're not awful. They're a little better than neutral. The trannies, on the other hand, had a rough couple of days last week, and now you're starting to hear bears talk about this being the peak in the trannies, and they're now headed below the October lows. Okay, kind of a mirror image setting up here, and eventually they're going to go do. I'm not buying that yet. I still think this resolves itself to the upside at all-time highs. This is a very big trading range, and unless the rest of the market gets weaker, I have to give the bulls the benefit of the doubt in the trannies. And the semis did not have a good week last week. It got hit very hard on Wednesday. This is the number one weakest sector on Wednesday. Possible double top here. So right now we're back at the low. For the semis, next couple days are key. If we can hold above this low and rally, then this will be a false breakdown, and that would suggest we're going way above all-time high, these recent highs. If we turn around on Monday and roll over to the downside, then we're probably going to go below, this low here. So semis certainly have some trading activity to look at this week. Let's see. I think Tiny mentioned Micron was reporting, so that could move the semis. Yeah. Looks like doo-doo in immediate term Thursday. Nice little attempt at a bottom here. Little divergence in stochastics. Lower lows, higher lows. Possible change of direction for Micron coming into earnings. Minor sectors or less important sectors here. Software. Looks like a trading range firmly established. Nothing really to do there. Telecom, which, as you know, has been one of my sector plays for the year. I had a crummy day on Wednesday. It's not trading poorly. It looks okay. I don't have a feel if this is the time where it's going to finally take off or we need another rally and decline first, but I still like telecom as a sector play for the year. Diversified financials look a little weaker than the banks, but really about as neutral as you could possibly get right now. They're just going sideways. Nothing there. The consumer, talk about every week, the decline, look, the decline in the XLY, consumer discretionary, was not that big last week. So what does that tell you? The consumer stocks did not go down that much last week. What does it tell you? That's a question for you guys to answer. As my wife and my youngest son just made fresh homemade chocolate chip cookies. Yep. The consumer's not done. Rumors of the consumer's demise have been greatly exaggerated. Economy is stronger than people might expect. Certainly could be a sign of strength. It's certainly not weak, right, guys? This is not a weak sign that the consumer stocks are hanging in. XRT retail, I mean, except for Wednesday, they're the leadership group right now. So retail is all consumer. So much for the consumer being dead once again. Scott, we're not selling any of the cookies. With my fat self around, they'll be consumed tonight because my kids are all upstairs, either reading or going to bed. So they'll be consumed shortly. As soon as I hang up with you guys, I'm running over to consume them. Okay, so let's see. Let's go to the industrials, which I mean, for a dollar being as strong as it is, they trade okay. And the dollar last week was at a multi-week low on a closing basis, obviously, and yet the XLI didn't get a bid. So there's yet another fallacy of the pundits. I hate the pundits. Basic materials, I have no comment. I haven't liked them all year. I don't like them now. I'm not going to like them anytime soon. So they're just not a late-stage bull market leader, and I try not to go into these areas. Energy, which I do own. So here's XLE. XLE still looks pretty good. I've discussed it every week for a couple of months at least. Does not trade poorly. You know, the Exxon Mobil's looks a little weaker than that, and the Chevrons. Chevron looks better than Exxon Mobil. They look okay. OIH, which, as you know, I've owned all year. To me, still looks pretty good. I still believe that ultimately we are going to roll back up and close this gap, the gap of recognition. I think I was on my cruise. I was on the cruise when this happened, but I do believe we're going to come up somewhere in here on the OIH. So I'm holding, and I've added my position in the last couple of weeks. So I've got a okay sized position in the OIH. Let's see what else. On the defensive side, consumer staples, nothing. I think they're expensive. I don't have any interest in looking. They're dead. They're a pair of twos right now. No interest. Utilities, surprisingly, have traded like poop. In the face of this great Fed day, they've given it all back and then some. There's something else at play here. They should be a lot stronger, especially if you look at REITs. REITs traded much better than utilities. So there's something else at play with utilities. REITs look fair. Healthcare, which I have a huge position in, pulling back to the old highs. It's kind of right in that sweet spot between 71.5 and 73, where if you're a bull on healthcare like I am, you can buy it, which I did, or I am, and I will, and I have. But I don't think the highs are in there. Biotech, which I continue to own, and I said last week, this candle, it set up biotech for a pullback coming into the week, and pullback it did. 1, 2, boom. Wednesday was a killer. Thursday and Friday, not bad. So biotech's had its pullback. The question is, did we just see a bottom at the 50-day moving average, or are we going to see a little bit of rally and roll over one more time to the downside? That's the question. And we'll find out shortly. Let's see any questions. Don't utilities usually go up with market weakness? Kevin, not necessarily. It depends on what the fundamental backdrop is. Utilities are, so market weakness is normally associated with perceived future economic weakness, which means rates are going lower, which means people will run to dividend yielders like utilities. We don't have that right now. So something else that playing utilities, I wish I could give you a reasonable explanation, but I haven't read anything lately, and I haven't even done any research. So just something to keep in the back of our minds. Tiny asked, I think Tiny mentioned that, you say, what do I think about the market? You know, I mean, I don't change my views very often over the intermediate and long term. I still think we're going higher. I think it could be significantly higher. I don't think the bull market's over. I think long before the bull market ends, we're going to get a full-fledged 10% correction, and then we're going to go back to new highs again. So I think the bull market's got some legs. And even though we're going to have a 10% correction at some point, I don't think it's here, but at some point we'll have one. And hopefully we'll be able to add some value. Let's see. You think the blackout period for company? Scott asked about the blackout period because earnings are coming up, and companies can't buy back the stocks now. That became a media story last week. Scott, I never recall hearing that previously. All of a sudden, some analyst planted that with some in the media, and now everyone's talking about it. So I don't think it's that big of a deal, and I don't give it a lot of credibility or credence right now. I don't use options at all, Jason. Maybe with a little bit of construction. So I don't trade options at all. When I first got in the business, I did trade options, and I was always I'm not a great option trader. Not great. I'm not even a good options trader. What I found I did well was when VIX was high, I did a really good job playing spreads. I was a pretty good spread trader. But doing nakeds, I was not. So after losing enough money and realizing that it wasn't one of the things I did well, I stopped doing it. But it doesn't mean that you shouldn't do it. And if you guys can do something well, attack. All right, let's go on. We did sectors. We did indices. The dollar, I am still wildly bullish longer term. The whole world is bullish, got bullish on this leg finally. Even the little guy got bullish. So it's hard to be really – the dollar – let me say this. If the dollar is headed right back to all-time – to new highs, we just saw the bottom last week. If the dollar is going back to new highs soon, that was the bottom, and you can buy it right now. I'm not totally convinced yet, but you have to give the bulls a benefit of the doubt in the dollar. Euro, I mean, still looks awful. I'd be really surprised if this was a major low. It could be an intermediate term low. Where is it really going to go? 112 would be an incredible 4% rally in the euro. That's possible, but I think longer term you just keep selling sell the rips in the euro. Although I do think the Japanese currency's got another 50% to go on the downside. One of my quant models turned positive on the yen last week, so I did buy a little bit on, I think, Wednesday. I do not have a lot of conviction in this position because I do believe that any rally forthcoming is an opportunity to sell for a much bigger decline. But the quant model gave a buy, so I followed it and bought some of the yen begrudgingly. Gold. So we came into last week, as you know, I was heavily long the GDX. I'll get to that in a second. Here's gold. I hate days like Thursday. I don't like this kind of action with big topping, with a big fat green candle and a big topping tail. I don't like this action at all. I ultimately think gold's going sub 1,100 and probably sub 1,000, but that's long term, and I don't know where we are right now. We're probably in the middle of no man's land right now in gold. Silver, kind of sort of the same. As I mentioned last week, a little bit stronger. Again, I hate this candle, but short term, could we poke above it? We could. Could we roll over here? Yeah. I don't have a lot of conviction. Platinum is, I think, just another dead rat bounce. Nothing there constructive on the long side at all. GSG, the big commodity index. it's so heavily dominated by energy, but maybe we're starting to see some kind of bottoming. It's just hard to get excited for anything more than a trade at this point in commodities. Crude oil, big day on Thursday, big day on Friday, just in opposite directions. As I've said many weeks, at some point we're going to get a 50% rally from some low in crude. The question is, did we just see the low here and we're going to go up from 40 towards this area from last week, or do we need another decline? Now, I'm long, so I am positioned for the rally now. If the rally fails, I'll get out, take my loss, and walk away. But I heard Gartman last week, or I read it, that he called crude to $15, which he's almost always wrong.
He sure did.
So if Gartman,
but that's against
what's that?
It's against the Brazilian real. He said it's 15.
No, I swear to God.
No, he didn't. He didn't. He's always coming up with those,
Qualifiers.
Formula. But he did say 15. He did say 15 U.S.
Yeah, I mean, I don't want to disparage. Yeah, I do, because I'm going to say it anyway. But I think he's a total quack. I mean, he walks like a duck and quacks like a duck. He's a duck. One day he says we're in a new bull market. The next day he says bear market. We're going down 1,000, whatever. So that's crude oil. Let's see. We did gold. We did silver. We did platinum. Oh, we did the dollar. We did the yen, the euro. Let's do bonds. Take a look at TLT, which I do own for the millionth time this year. I got to calculate if I'm up or down than this year. I've traded it a lot. I did a good job come him being long. That was fun. This, I got stuck long. This was not fun. So bonds on Wednesday and Thursday did not lend support, or there was not support for bonds when stocks were struggling. That's very interesting to note. Wednesday we saw bearish engulfing pattern right when stocks got kicked in the teeth. Make a serious mental note of this. That shouldn't have happened. So, very key week for bonds. 10-year yields. I'm sticking with what I said all year long. 150 on the downside, 230 on the upside until proven otherwise. We'll see what happens this week. The bears have a little bit of tailwind. We'll see if they can take out the high yield from last week, and if they can, we may get a bigger rally in the 10-year yield. But I don't think it's going anywhere anyway. I think go to the top end of the range, and you can sell the top end of the range, and it will go back to the middle of the range. I don't think this is the year for a big move in bonds either way. Let's go to, let me pause for a second. Let's go over to the AD line. AD line made an all-time high. So did the stock market. Bear markets don't start with the AD line making an all-time high. There's usually a fairly significant lag period. We have no lag period yet. So all the bears can suck on this one and wait, because it would be almost unprecedented for the bear market to begin right now. Junk bonds. Here's JNK. It's looking a little more constructive. I think we're in put up or shut up time. We had our pullback off of this massive rally. Here's the pullback. Now we've retraced a little bit. It's now time. Whomever is going to step up, you'll have a trending move. So if we get some strength coming up in bonds, in the junk bonds, then I think JNK trades back towards the upper 39s. If we begin to roll over now, I think we're going sub probably towards 38. So a lot of instruments have key weeks coming up. Here's the plain vanilla junk bonds. Looks very similar to JNK. Here's the PIMCO bond. So again, key week for a lot of instruments. Let's see. You can get a barrel of oil if you subscribe to Gartman's newsletter. That's pretty good, Scott. Let's bang out some softs and grains, and we'll move on. Here's wheat. We have our divergence, a little more intermediate term. Pulled back last week, perfectly at resistance. Doji right at resistance. So once again, we're in this trading range in wheat. I'll give the bulls the benefit of the doubt right now. Let's see if they can mount any kind of charge. Beans. This forever trading range continues. This epitomizes how commodities bottom. It'll probably be a year-long trading range, which is not uncommon at all for commodities. And corn. Again, the bulls had a little bit of additional oomph last week, but what are we? We're smack in the middle of the trading range for 6 months. So nothing really exciting in the grains at all. What your takeaway could be is, given how strong the dollar has been for 6 months, it's significant to note that the grains have resisted really declining, I guess would be my takeaway. Sugar, oh my God, nothing with nothing at all. Cotton, again, yet another one with a very big, long trading range. I'll give the nod to the bulls here as well because they've resisted the dollar strength, and look, this one looks semi-constructive in here for higher prices. Cocoa, nothing. Coffee, nothing. Wow, so many of the commodities, there's nothing doing it whatsoever. Yuck. For me, any other questions, comments? Key week for a lot of instruments. We'll see what happens, but we only have a 4-day week. Yay. Any other questions, comments? Quiet group tonight. Oh, GDX. Thanks, Kevin. Yeah, I'm going to cover GDX. Hopefully you guys saw the Yukon women put on a clinic. What's today? Sunday. Yesterday. So if any of you guys are in Tampa, I just booked my plane tickets to Tampa for the Final Four next weekend. When's the Final Four? It's Sunday and Tuesday for the women, because my Yukon men obviously sucked and couldn't even make the tournament after winning a national championship. But my daughter and I will be heading down to Tampa next Sunday morning. Here's GDX. I came into last week heavily long. Wait, so here's we came in last week. I had a big position, and I took a little bit off there. No, I took a little bit off on Friday, took a little bit off on Monday, took the rest off right here. And then I bought a little, did I buy it? No, I did not. So that's the GDX. It bounced right back to where it was supposed to. I was playing the bounce back to here, and it bounced right to where it was supposed to kind of close the gap. What do we look at now? I have no idea. Now we're back into the middle of nowhere on GDX. GDXJ, I think, looks a little better, if my memory is right. No, my memory is wrong. It looks exact same. Sorry. Let's see. Paul, we did not have sell in May and go away last year. Any opinion on this year, considering where we are right now in indices? I don't have an opinion if sell in May and go away is going to work. Right now, I don't see the ingredients to have a double-digit decline, a full-fledged 10% correction. So can sell in May work? it depends on where we are in May. Every time we decline and rally, the AD line picks up and all the ingredients for a big decline go away. So it's hard for me to get bearish right now. I know a lot of people want to get bearish, but for me, I've except for short-term pullbacks, this is the same kind of tack I've taken since early of 2012. Don't get bearish too early. Don't bet against Kentucky too early. I was heartbroken last night when Notre Dame, and I think Mike Bray's a really good coach, but he just got schooled when he let that guard take three. What's the guy's name? Jarian. I can't remember that. Jarian, whatever that guard was for Notre Dame. 3 awful shots in a row to lose the game, and I think it's all about coaching. So I have Wisconsin in the Final Four. I have Kentucky in the Final Four. I have 3 out of 4 Final Four. But then I also have Virginia. And so what, Michigan State's in there? Yeah, Michigan State. That's pretty good. I have 3 out of 4. I'm sure everybody else does too. And then I have Wisconsin beating Kentucky, and I have Virginia beating Duke. So I'm not going to win regardless. Let's see what else. How long would AD line have to be down for you to get bearish? It's not down, Jay. It's I want to see the market continue to make new highs and the AD line goes down. So we're a long way away from that. I don't see it happening anytime soon. Scott, no, I'm not. I so hate, it's like everybody, if you don't live in Connecticut, I'm sure you hate UConn women's basketball because it's a dynasty. So anybody who's outside of Connecticut roots against UConn women. I can't stand Kentucky. I don't like Calipari. I think he's a cheater. And I am definitely bitter and jealous that they have an NBA team every year, even though my UConn men beat them last year. So, and I also don't want the fate. I'd rather have someone new. I think it'd be a great story for Wisconsin to win. I really like Wisconsin. Wisconsin seems like a good, sound program. That'd be nice. Krzyzewski, I'm kind of been there, done it. And even Tom Izzo at Michigan State doesn't really excite me. So I'm going to root for Wisconsin to win it all. Scott, I agree. Belichick is he is a cheater. Belichick's the biggest cheater in sports. You're right. He continues to win. How about the fact that Goodell totally went silent on Deflategate? Yet he's going to penalize the Browns and the Falcons severely for nonsense. I noticed you use candlestick patterns a lot. What are the main ones? Jason, what are the main ones? Tiny and I both love hammers and inverted hammers. And we both like bullish and bearish engulfing patterns. And we both like piercing patterns and, oh my God, I forgot what the opposite of a bearish piercing, but the upside down piercing pattern. I like the basic ones, evening star, morning star. Doji doesn't have the power of the other ones I mentioned. Doji's more of a warning sign. We could get either a full-fledged trend reversal or just some sideways activity. But I look at it anyway. The other ones are more powerful and have better predictive value. But you can't use candlestick, as Steve Nissen always says, candles in context. You can't use candles in a vacuum. You got to look at other things as well. Right, Kate? Right. My daughter says yes. Candles in context. And she's running around in her UConn women's T-shirt, getting ready. Love you. All right, last call for questions, and I'm going to turn it over to the little man. Candles don't work in a vacuum. No oxygen. Yeah, I told Scott, very good. Scott says candles don't work in a vacuum, no oxygen, right? Nothing works in a vacuum. You've got to combine a couple of things together and then attack. Although what you can't do, which I've heard so many people do, they have the perfect setup. It involves candles, moving averages, stochastics, MACD, RSI, money flow, Donchians, rate of change, etc. And you wait for everything to line up, except it never happens like once in 100 years. Do I train my kids in investing? I do. Jason, I train my kids that so they know that company, you can actually buy shares in companies, and then when the company does well, you kind of sort of do well as well because the share price goes up in most markets, not all markets. They can stay and they see my screen and watch. They know red is bad and green is good for the most part, so they understand that. And I always try to teach them whenever everyone says one thing, it usually means the opposite's going to happen. So, well, my kids are still little. Yeah, Dimitri, I agree. Most are lagging. I mean, most indicators obviously are lagging indicators, and they're great for doing a review. When I trade and invest portfolios, I try to look at obviously not leading indicators but probabilities. So, what's the probability that the market's given this setup, market's going to go up in the next month? Last call. Any other questions, comments, disagreements? Kevin, I bagged doing media for the next 2 weeks because I'm going to go to Tampa for the Women's Final Four and also a Passover in my religion. So the week of April 14th, which I'll be on Payne's show on the 14th, and then CNBC's Closing Bell on the 16th. So that'll be a big media week. And then after that, I'll go back to scheduling, one a week or one every other week or something like that. So that is all. I look forward to chatting with you guys next week. Have a great week, and I'm going to get some cookies now. Yeah, Tiny, Kurt wants JetBlue, and I'm flying JetBlue, so I just want to make sure that it's going to be safe.
I have no idea. Yeah, the airlines all look great. JetBlue and AOK, and AOK doesn't look great, but Southwest, they all look okay because of oil. But JetBlue he looks best in breed, as they say, as Jimmy Cramer would say.
That's good, because I'm flying them, baby.
All right. Have a wonderful time. All right. Give me your stocks, and I'll go over them for you. Notice the plural. Guild is, just eventually is going to go, but in the meantime, Guild is a giant wait and see. I would not be looking at getting Guild until it breaks. I still think Yelp is going lower. If it does poke its head up, though, watch the 50-day moving average as potential resistance. ISRG, more sideways than anything. This could be a head and shoulders pattern. I'd watch the 200-day if it does decide to decline. If it gets over this last high at 515, we'll call it, you do have a little bit of resistance at 523 before it can get to the highs again. Rite Aid, just nice and strong. Continue to buy pullbacks until it says otherwise. It looks like $10. It's headed to $10. Kroger looks okay too. Really nice, strong uptrend here. Again, if it can break out above, watch 81.75. Looks like resistance potentially. Well, looks like a target more than resistance, I should say. Starbucks, it got cracked Wednesday with the rest of the market, then formed the hammer on Thursday. If it can rotate off the 20 EMA, it could do okay. MXWL. Yeah, well, this one's woken up here. I guess you could call this a small cup and handle. I don't call it that, but I definitely call this a coil, and it's starting to lift here. So maybe it can get to the 200-day moving average. Salesforce.com. Let me draw some lines here on Salesforce. You got a triangle forming here more than anything. So it may have to bide some time here while it fills out. But, yeah, it looks like it's forming a triangle. McDonald's also. Look at this. All right. Yep, looks like a triangle. Apple, yeah, if it doesn't hold the 50-day, it should go back to 120 pretty quickly. If it does hold the 50-day, it has to take out this last high up here. Okay, so that last little high in the triangle at 129 and a quarter has to take that out. EXAS, it's more sloppy than anything. I mean, it's back above the 200-day, but it's really not, in a rush to go anywhere. Newmont, yeah, it looks lower. I mean, it kicked up to the 200-day. It held it as resistance. Now it looks like it's going to go lower here. Got to wait for the breakdown, though, obviously, but it looks like that's where it's going. I mean, FireEye looked great, and then it just fell out of bed. It broke the 50-day. Now it's kind of creeping back. But if it fails from here, watch the gap fill at, boom, 36.80. Watch the gap fill at 36.80. Celgene, sloppy. More sloppy than anything, but it seems to get some responsive buying every time it comes down into this range. So see if it does once again. Dow Chemical, 200-day moving average is potential resistance, and then 50.22 is this high that's also going to be potential resistance. AGNC, yeah, more sloppy than anything. Could be a bottoming pattern, but boy, I mean, it's really got to get above 22 with a bullet, and then you got 22.51 as the 200-day. Otherwise, I mean, it looks like it's in a short-term downtrend here. Okay, that's what I'm looking at. NLY, it looks like it wants to go lower. Looks like, this big gap down leaves a hole in the wall, and looks like it wants to go lower. Tiny, from not only a chart perspective, but also fundamental perspective, what do you think about HAL? Yeah, I mean, look, fundamental-wise, and I don't know if you're looking for real fundamental analysis or just like, look, Halliburton's in the oil business and oil's not going away anytime soon and they're still going to drill. I don't know if that's really fundamental analysis more than it's just, the story, right? And I don't like stories. I'm anti-story. Okay, I do like one story. I like Disney. Disney's my favorite stock in the world because I believe that they're very smart in their business practices. They're very intelligent in what they do. It has nothing to do. Only my kids own Disney. I don't own any Disney, but my kids own Disney. I'm not pumping and dumping the stock. I'm not looking to sell it. But that's kind of where I draw the line with stories. And the reason that I draw the line with stories is because I've heard plenty of stocks have had amazing stories and have very good reasons to go higher, and they've fallen on their face. And then other stocks have had great reason to not accelerate or not go higher, and they do. So, you could go, bat poop crazy trying to interpret, oh, well, there's a Starbucks on every corner. I mean, yeah, now it's working, but how long did Starbucks, did it not work, right? For a stock like Starbucks, right? So, I mean, there was plenty of time back here, this big decline here. I mean, and I mean, this isn't like, what do you want to blame for this monthly double top? You want to blame the bear market? I don't think so. This wasn't the bear market, though. I mean, part of it was this little correction, but for the most part, right, Starbucks were everywhere here, right? This is where Starbucks was really going bananas. Right now, of course, the stock is gorgeous, but, besides the point. So, I mean, that's why I'm not really a story guy, to be honest. But you're right. I mean, we're still drilling, but I guess you can almost say anything for that. You can almost make a big story. This ALTR, I assume that's a real candle. I would wait for digestion. Unless they got bought out, but I don't think they got bought out. Okay, Whirlpool. Oh, Intel buyout. They did get bought out. Okay, that's what I thought. Yeah, I mean, I would just wait. Unless Intel backs out, it's probably not going to go very far. Whirlpool, a watch here. I mean, you got some support in here, but it has to get going. It has to really get going above the 20 and the 50. Okay, LNCO, we talk about this one a lot in here. Looks lower. I mean, it looks so nice. This pop-up, gosh, I really liked it. To pull back and then go higher, instead it just fell on its face. And now it looks like it's going to this December 2014 low. GDXJ, until it gets over the 50-day, I gotta think it's going lower. Gotta think it's going lower. Anything else? Any other stocks? AXP. Okay. Yeah, it looks lower. It's been looking lower for a while. Okay. Baidu. Yeah. I don't like patterns like this because it's setting up under the moving averages. But why I really don't like a pattern like this is because you can't guess at what it's going to do. Right? You got to wait for it to break one way or the other. Jay asks a question real quick. Tiny, is there anything you look for when a stock is in a triangle for a higher probability breakout, higher or lower? That's a great question, Jay, and the answer is no. You can't. A triangle is an equilibrium, brings down the stock to an equilibrium point. Now, a coil after a big push up is a pennant. That's a continuation pattern. That's a different story. But a triangle where the market just takes its time and whatever it is, a week or weeks or months or whatever it is, and just really just starts hammering out and brings price to an equilibrium point, you gotta, go with the breakout and set a freaking stop if it fails. What you can never do is say, well, it broke out up, broke out higher, and then it starts pulling back, and you decide, hey, you know what? Okay, now I'm not, I'm not going to, stop out because, hey, it broke out higher once, it could break out again. Triangles can fake out, all right? So you got to set your stop, and then you got to look to take another entry either the other way or the second breakout up through it. But the good news about a triangle is once it does release, it can really lead to a strongly trending move, like really long. So that's the good news. GDX, I don't know where the heck I typed that, but it wasn't there. GDX, yeah, I mean, it looks lower. Baidu, we just did. CU, yeah. Yeah, these are like, I mean, yeah, here's like, this is forming a triangle here, right? So you gotta give the nod to the downside because it's coming after such a strong downtrend, but you almost have to be willing to try along if it breaks out. But remember, we're under the 200-day, so you really gotta be tight with your stops whenever you're going long. Okay, STX, yeah, it looks like it wants to go and test this low down here, right over the 50 handle. AXAS, yeah, coiled up. See, this is more of a coil than a triangle because the swings are tight. Wait for it to release, though. You're still waiting for it to release, but it's more of a coil. Baba, yeah, Baba's in a triangle too. We gotta get rid of this. Let's get rid of this, and then we can do this, and then we can do this, and then you got your triangle again. If it's me, since it's occurring at all-time lows, not at exactly at all-time lows, but it's up off those lows. I'm looking for it to release to the downside, but got to watch it either way. What stocks do I like now? I haven't really been looking. That's the problem. I've just been doing day-to-day stuff with the futures. I've been so busy. I'm moving into a new office, and I just went into a partnership with a couple of guys in a new business venture. So I haven't been really focusing on the market as much as I want to, but once I get in the office, I'm going to be back. I'm going to be back to full time again, so that'll be good. Honeywell looks okay. I mean, it's got to rotate off of this 50-day moving average. Okay, so Kevin asks that does the triangle usually continue in the previous direction? Again, if it's a real triangle with nice swings in it, I'm waiting for it to release one way or the other. I'm not putting a bias on it. Okay, if that makes sense. Twitter. Yeah, I mean, this thing's back from the dead. It's got to really get above this 56 handle. It's got to get above the 56 handle. JSO. Yeah, I mean, good job getting above the moving averages, getting out of this congestion, but it looks like it really got to get through 1050, and then you still got resistance in the low 11s, and then 1170. Okay, GLD. Thanks, Jason. I appreciate it. GLD. Yeah, I mean, I think gold's going lower, so to me, I mean, we hit into the 50-day and now we're declining. So we're going to see what's going on here. And then GoPro looks just terrible. This is like I mean, this is the definition of a downtrend. Overall, the picture is weird. You had the coil, you broke out, the euphoria came in, and now it's just like, whee, right? Like here's a great example of a triangle, right? So here's your triangle. It's not a great one. That's the problem. So I don't know if it'll be a good example, but it's not bad. There's your triangle, right? Previous move was up. But you see how it didn't really set up right near the highs. It kind of pulled back first and then set up. But then that's why you wait for the release. And this time it released to the downside instead of the upside. All right, that's it, guys and gals. I'm going to do my market video if you want. Yeah, I know. And the reason that I'm going to do my market video right now, by the way, is because I recorded it already once this weekend, and I did not have the volume up. Again, so I did it twice. So this time I will absolutely be sure that I am recording with volume, and I am going to do my market video. You are welcome to hang around. I'm going to stop